S&P continues to hold the line. This 4,200 is like kryptonite. We're going to talk about what's going to finally get us through that level. If we take a look at the Nasdaq futures market, we can see same exact thing where you're just running into that brick wall now up at that 13.3 over and over again. We're going to discuss what could possibly finally break this out, why the SMH is hanging in there and holding that line perfectly. Reviewing the stocks that are up $10 after hours on earnings and the ones that are down $10 after earnings. Why the last hour and what's happening right now is extremely important. NVIDIA's crystal clear breakthrough. What smart money and dumb money is telling us. Hey guys, welcome back. We have a lot to go over, so let's just get right into it. If we look at the futures market, we can see our level and we can see very clearly how this 4,200 just is consistently being tested and just unable to break. That's not a bad thing. And we're going to discuss this. What's happening is we are constantly making these higher lows and we're getting tighter and tighter against our line. This is exactly what we want to see. This is the type of pressure that you want to see from the market. Now the question is, zooming in on a 4 hour, what is going to actually get us up and over? And we're going to address that today. But this is your level. This level has not been able to break. I think it's very important what happened today. If we take a look at the opening, let's kind of take a look at what happened right here, right? You can see this pretty clear, and then it just starts lifting. We start pushing. Actually, here's your open right there. Let's move this up a little bit. So you can start seeing the open right here. Tries to get through 4,200, rejection over 4,200, breaks the neckline, rejection, comes down, tries to hold that 41.84, which was the open, and then we just sold down towards the end of the day, which is not unusual considering what's going on out there with the Fed meeting this week. Wednesday is the big day. Tomorrow will be light volume, lots of failed breakouts and breakdowns. But this is definitely something to pay attention to. We could have gone several different ways today on this market, and we didn't. That's not what happened. What we did do was retest 4,200. We could have just as easily reversed, and that's not what happened. So all we did was hang out up here. And yes, we did sell down at the last hour of the day, but that's just people taking profits. And if you look at the net buying in the last hour, which we're going to do, you have nothing but buying. Now, if we drill into NQ here and we take a look at what's going on, we'll see real clear here how we're coming straight across. We can see our level sitting right here and how this level's playing. The most important thing about that level and the NQ level is that it's constant, okay? It might not be exact, but it's constant. Whether it's 33, we're talking 13.3, or we're talking 13.2, no matter what we're talking, that's the area. And for whatever reason, this is the area since August that we've been having trouble with. I just want to point out the fact that you are still making higher lows. So why this continues, I don't see a reason to just assume that we're going to roll over again. Now, if you watch Saturday's video, which I suggest you do, and I'll link that at the end of this. Pay attention to what we talk about here, okay? This GDP data, when this came out, the market moved. That means that the market is not factoring in that there was only one rate hike left, okay? And I think that should be pretty crystal clear to everybody, but that of course is up to you and your opinion. But to me, I don't see how anyone can think at this point that there's more than one rate hike left. If we look at this level and we look at how we're setting up and we look at the breakout and how that's going, we should feel pretty confident to let this play itself out right here. And I do think that Wednesday, and we're going to talk more about this tomorrow, I do think Wednesday we could actually see a relief rally no matter what happens, because at least it's over. Semiconductors. We can see from the high back here, over, test, testing all of 2023, right? All from that anchored VWAP. Now, why am I looking at SMH versus the SOX? This is more weighted in a couple things. Number one, it's more weighted in NVIDIA. And I think this is showing a clear indication of what's going on. I went over this over the weekend. Now, if we zoom in on this Doji, you can see the high of 249.36. Then you come over here, you see 249.92. So day one of the new week, and we already have an outside week going into the Fed meeting. Not only do you have that, you have this DTL, downward trend line. So this is setting up. So we have this DTL. We know that this is overweighted in NVIDIA. Let's take a look at NVIDIA. We talked about this in the pre-market live. If you don't follow the pre-market lives with us at 8:15 in the morning, it's public, it's free. You can always watch them on replay later. We went over this today. We went over why this could actually happen and why this was a huge flag. We went over it on Saturday. All these videos are connected, and I'd strongly suggest that you will try when you can to watch them in order. So if you take a look at this, this was beautiful. This was setting up to rip. It did. It ripped. period. There's nothing here that you're going to look at. Okay, you're down a whopping $1 this evening. We'll see where we are by tomorrow morning and where we open, and we'll go from there. But if it's down $1, it's down $1. It's not a big deal. We bought this today in the Alpha Chasers community. I think we started around 279, 280. I'll show you the exact level because this was just a textbook move. Let's get rid of the pre and the post, and I'll show you exactly where we did it. So if you come straight across, let me go back to the 4 hour because it'll make it really clear where it is. And you can see your level sitting right here, 288, 289, right? Now you came back here and you're in that 4 hour bar. So we're going to dissect this bar right here. And we're going to drill into this on the hourly so that you can see it. And then you're going to see this little hold right here. You can see right where you held right there, that low, right? Now, if you take a look at that low and you drill in on a 15, and then you drill in on a 5, see where I'm going with this? Now you drill in on a 1, and this is what we saw today. 1, 2, 3 down, reversal, boom, that was it. There was your buy. Very simple trade, but why is this level important? Let's go back to a 4 hour chart and look at this level and see if we can figure out why that level was important. Drop it back to the hour. I'm straight across with it. Isn't that convenient? Look at that level. Support flip to what, right? Was support, flip to resistance, support, resistance, flips to support, okay? Same exact thing is happening right now up here at the 288, 289 level. Right at that same level, let's flip this out to a 4 hour. This little wedge line right here, you're starting to flip that line. And you could see that today. I'll show you, I'll drill into it. Look how you tested it. Let's pull this down, pull this over. Wish this moved a little bit easier. You see that right there? Look how it tested. Look how it held. It's impossible for NVIDIA to keep doing this and the semiconductor space not to participate. It's just not realistic at all. And if you look at this and what this chart's telling you, it's telling you that you're heading back here, 320, 330. I'm going to be really clear about this, just so everybody kind of gets this, okay? This was the all-time high on the stock. If we go back and take a look at this on a weekly, and you look over here, right, and you realize that 340, 350. And then if someone was to tell you that if you come straight across here, and we just drop this down, that we are 15 to 16% off the high of NVIDIA from where we were in October, and they're telling you that the lows of the market are not in, it's just outright delusion at this point, okay? It doesn't mean we're going straight up, but you have to start looking at this and actually looking at what's in. The biggest thing that I see people do in this market, when they come out of a bear market, which we are out of a bear market, okay, and this is the technical definition of a bear market, the number one thing that people do wrong is they just assume that they're always going to be in a bear market because they missed. If you take the bottom of a bear market, and that is the low, and you come up and you make 20%, you are out of a bear market. The bear market is over. This is irrefutable, right? This is not a debate. That's just a fact. That doesn't mean that you're going to go up. Could mean that you're going sideways. But if you're waiting for this October low again, you're waiting a long time. You're going to need an event. You're going to need a massive, massive recession, massive earnings revisions. And earnings right now are coming in plus 6% on the quarter when they were supposed to be coming in at minus 7%. Okay, so what I'm getting at here is start going through these sectors, start looking at them, hope that we sell down on Wednesday so that you can take advantage of the pullback and start looking at where you can put money to work. That is another one that's very clearly breaking out. Okay, if you come down to this level, let's lift this off for a second. Okay, here's your cup. Now you're flipping a higher high. It's day one. You already have an outside day. You already have an outside week, rather. Day one. You're already flipping. Okay, if we take a look at this on the daily, light volume, but it caught later in the day, and that's what's important. 1, 2, 3, and then we break out, holding this level consistently. Take a look at NVIDIA again. Let me show you this before we go into some other names. Look at this volume spike. Look at that amount of volume that came in that day, okay? This is everything that you need to see, right? And this is what I would be focused. Now, there are some signs out there that are a little concerning to me, and I'll give you an example of one. This was actually something that I traded after hours in the room today, and it was just a fun trade, but we actually did quite well with it. Here, let me blow this up and throw in the extended trading, and I'll show you. So I just posted this when I was in the room. A couple of the guys were trading it after hours, and I was just looking at it, and I could see this wedge forming. And as soon as that wedge broke, I bought. And then within like 5-10 minutes, this happened, and I'm going to just be candid. I just blew it out. I just locked it in. But when you start seeing this kind of froth in the market, let me get rid of this. When you start seeing this kind of froth in the market, you need to pay attention. It's not ideal, right, to see this kind of stuff. And we've been seeing it everywhere. So it is a red flag to me. It does concern me when we start to see these things and you're trying to figure out what's the next one and you don't even know why they're going. And they're not all going to go, right? Some are going to look like they're going to go. Like this looked to me like it could break out today and then it just failed right at VWAP again. But this very well could continue to move tomorrow until it doesn't move anymore. I mean, that's usually what happens with these, right? But keep this in mind. Now, after hours, as far as earnings, you've got a couple of really good ones. NXPI, you can see how you're forming a flag, but you never got above that 15-minute, did you? We never got above there. So revenue beat, earnings missed by a little bit, looks like. But if you take a look here, we never got over that level. So we're going to watch this tomorrow. NXPI is a really good metric to use. And you can see how we're bidding up still on that. So, I mean, no one's going to complain. My problem with the name is that you're running right into this. And you're going to get way more color tomorrow on AMD. Way more color. And I think this was a really telling trade today, actually. You tried to rally up, and all you did was get right back to the close because you had late volume. And you held right in there. But tomorrow night, that will have earnings. That will definitely move NVIDIA tomorrow night. There's no question about it. I believe it's tomorrow night. Let me double check that since I'm saying it. But yep, tomorrow night. But if you take a look at these kinds of names and how that's going to affect NVIDIA, yeah, it's absolutely going to affect NVIDIA. Now, the other thing I did not like today, and I want to just point this out, is what they did with Apple. And they actually caught me with Apple, which is actually pretty rare. I usually don't fall for what I refer to as the banana in the tail type, the breakout, and then that happens. So, but if you take a look here, right, we can all see this DTL. We went over it on Saturday. You see that DTL right there? Okay. Then you see this move. So let's open this up big time. And then you're breaking out, then you're going sideways. Now you got a doji. Dojis are signs of what? Uncertainty, right? So now we have uncertainty coming into Thursday. So I still have calls outstanding. This still looks attractive to me. Okay, I didn't get what I wanted. I understand that. I've got the Fed meeting. It seems to me that the Fed meeting is going to outweigh everything right now. I'm going to give you another one to watch tomorrow. This is one we've been playing around in the community for a little bit of time. We've had a really big move. Nice little breakout here. You had a really positive note from Goldman this day on why the stock would be worth $13, $14. And it broke out, came back, did the retest of the level, which showed us what? That resistance is now support, and it's been pushing ever since. The implied volatility of this move is close to 12% on earnings, and earnings are Thursday. You're probably going to want to keep that one on your radar. I would also just point out a couple things. Microsoft had an absolute monster move. Absolute monster move. We went from 274, we are at 305. I just want to put this in perspective so that you understand this. Okay? That is a 10% move on a massive, massive company. One of the largest companies out there. Now, if we just drop this and look at the fib levels between this move, I just want to point this out. You can't get past a 78.6% retracement. That's as low down on a retracement scale as you can get to off this move. That tells you everything you need to know about this market. This market is extremely resilient right now. Every dip is being bought. We're seeing it. We're seeing it. It's slow, it's stealthy, but it's there. If we take a look at smart money, dumb money, we look at the confidence, we can start saying what's happening. Smart money, which is institutions, right? We don't refer to it as smart money. We try to refer to it as institutions because it just makes more sense because that's really what it really is. And this is retail. But if we look at these levels, well, you're starting to turn here. And if we take a really hard look at this, you're turning here too, right? So the spread between these two is going to start changing. Meaning if the spread narrows, and you want a narrow spread, right? If the spread narrows, the market goes higher. That's just the way it is. When this spread narrows, if you take a look at these spreads, let me clean this off for a second. I'll show you what I mean. We'll go out to a year. When these spreads narrow, see how the width is the peak? See how when they narrow, what happens? What happens when they narrow? So you want them narrow. You have a spread here actually, which is kind of interesting. I want these to narrow. And so I want smart money to buy and I want retail to buy, but maybe not at the same pace that we're going to see. I would not rule this out. And if I was looking at this and I was an institution, I'd be very concerned about not being long enough after the Fed because you had decent earnings and now you have the Fed that's done. And if you don't think the Fed's done, comment below. But I would love to hear the reason and rationale on why the Fed is going to raise rates again as we're losing banks and GDP estimates came in at 50% below estimate. Okay, there's no reason we're heading towards negative GDP. They're not going to raise rates into it. And net gross margins and guidance were not the best. You can't be a company that's trading at this level of PE, even if you beat, and think that you're just going to be able to stay up here. You're going to have problems, and that's exactly what happened. We're down $12 after hours. I would watch how this trades tomorrow, but anything that's breaking like this, I would just continue to stay away from. I would focus on the names that are working, and the ones that are not working, I would stay away from and not bottom fish. A classic example of this is Amazon. This was one that was on my short list today, and candidly, I just had some very large trades on NVIDIA and a couple other names, so I didn't do it. But if I look at this, okay, you're breaking down. If you drop the 200 into here, and let's put that in for a second so everybody can see exactly what I'm talking about. Okay, here's your 200-day moving average. Boom. Okay, the only thing you want to do is short this when it rallies. That's the only thing for us to do here. Okay, that's the only move. So that's how I view the world here, and I would not be chasing the ones that cannot get above the 200-day moving average. We keep hearing that the breath is awful, the breath is awful. Okay, 60% of all stocks are above their 50-day moving average. We're actually making higher highs. As the market is going higher, more stocks are getting above their 50-day moving average. What does that mean? It means the breadth is increasing. If you take a look at the 20, you're seeing the same exact thing. Since Thursday, more stocks are getting above their 200-day moving average. That means the breadth is increasing. Take a look at the 200-day. You're still above the average line. If you look at every move that we've had, here's the one from November, here's the one in January, here's the one that spanned the March move. Okay, every single time that you're under 50 and you go over 50, you see a move in the market. Now, if you look at these dates, okay, and then you have the March date now as well, bottom, under 50, over 50, 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 okay? Do with this what you will, okay? Do with this what you will. Clean this all off for later and get rid of as well. So keep that in mind, okay? You're seeing more and more of this. Now, there are things here that I'm not crazy about. I'm not crazy that the XLP is setting up the way that it is here. Like, that does not make me feel great to see this starting to break out here. That doesn't make me feel warm and fuzzy to see defensive names move. So I am watching that, and it is a concern of mine. XLU is not really moving. XLV is not really doing much. Okay? And XLC broke out above a key level, and it's staying above that key level. The biggest issue that we have right now is for us to figure out exactly what the next move is for regional banks. That's the big thing for us, right? Is this actually going to crack? Is this worse? Is it going to spread? Are we going to lose another bank? I don't have an answer to that. Okay, this PACW looks absolutely awful to me, and it looks like it's got some issues that I'm not aware of, candidly, because I liked the report. I thought it was decent. I think they took the write-off, and I liked what they had to say. Apparently, I'm the only one, because the stocks has not come back from there. MTB is just bouncing around. I have a position in that. I'm not worried about it. But regional banks, you're seeing some weighting on those. The regional banks is causing weighting onto the home builders today, and we saw that. That's most likely a buying opportunity, in my opinion. Now, for those that are new, this is an indicator that we look at a lot. It's the last hour of trading, and it shows what's going on in the market during the last hour. You get a positive one or a negative one, depending upon whether or not there is net buying in the market during the last hour. The reason of the significance is because institutions usually buy in the last hour. I think this is extremely telling, and I think that we should be looking at a couple key things here. So the very first thing that I would want people to focus on is this enormous drop that you had in here. Okay, you had this huge drop, and where did that drop stop and bottom? And I think that this is really important, right? So you have that level right here where you can see that, and you can really kind of mark that right around here as well, right? That is when we bottomed and then went sideways, okay? And what happened up there when we bottomed? That was the high of the market. The entire time you could see that we had weakness in the last hour versus how we were in 2020. It doesn't matter because this is a long-term indicator, but this means that you are seeing net selling by institutions in the last hour. Well, then we're going flat, okay? And we're working this off, tries to rally over, pulls back, flips. All right, so now we've flipped that level. And if we take a look at that flipped level, and we just come across from here and just draw our line straight across, right? We can see how we have a base here, and now we have net buyers and have had net buyers since this date, okay, which is January. By the way, the Nasdaq's up double digits this year, if you haven't noticed. So here you are in January, here's the breakout, and here's the movement of the market. At the same time, the market is not moving commensurate with this move. And the reason is because this takes a while to dry up. In other words, I have to go out there and get all the supply that's out there in the last hour. That's why this is a delayed reaction, right? Because we're eating up the supply via demand. The same reason why when you had demand here, it was easy to sell into supply. Just something to think about, okay? Something that I would really pay attention to. Please comment on this video. Let me know what you think. I'm trying to drop more information than just actionable things is what I'm trying to do. So I hope this was helpful. Please comment. Let me know. If you find value in this, please share. There's so much garbage out there. I'm just trying to get actual facts in front of people. Have a good night, everyone.